What up, Chad? Welcome to the show. Today is the fifth and final Turtle Wave back testing session. We're going to be doing the final little tweaks on the Turtle Wave, finalizing what are we going to be doing with the RR, what are we going to be targeting, what's our entry criteria, what's our exit criteria, and everything in between. So it's going to be a bit of a short one. We've done a lot of back testing behind the scenes. I hope you guys have been following along with it. So this is the final little prep. So without further ado, let's get into the chats. So okay. No, nothing. All right, having some technical difficulties, Chad. Bear with us. Gonna figure it just now. Rux in the building. What's up, Rux? How you doing? How you doing? We had Mo in the chat earlier. Now we have Mo in real life.
Default.
We're gonna be all good now. When I'm in full screen, it's when we transition to the charts. Suddenly it disappears on us. Dave. As Rux, how's your trading going, bud? You've been jamming the Turtle Wave? I have not been liking the Turtle Wave since we broke all-time highs. What was it? End of last week. Gold has been ranging. Like I didn't want to take it today because we broke below. That would have indicated sells, and something about just didn't sit right with me. I didn't enter it. Watched it wick right back up, indicate buys, and again I was like, We've been ranging all of yesterday. We have NFP tomorrow. We're probably going to be ranging all of today. Didn't take it. Faked the buys out. I think we'd have gotten 80, 90% to TP. Reversed right back for a major sell.
Let the audience know we're gonna transition.
Okay, we're going to transition back now and see if the audio is good.
Let us know.
Let us know if the audio is good, Rex. Okay, we're having a look-see now. Hopefully you can hear me. Yeah, so just let me know if audio is good. Okay, cool. Audio is good. So yeah, it's a whole thing when when gold's trading right at all-time highs, or in the range of all-time highs. It is. So the turtle wave requires a trending market. As soon as it starts to consolidate and starts ranging a little bit, you're gonna be in some tricky price action. But we're gonna retest. We're gonna backtest September. So I'm gonna be able to compare now September, which is now paused, which I traded live, with what this backtesting session reveals, and then we can see if there's any discrepancies over how I entered it in real life versus how the backtesting session is gonna go. So it's about to get all interesting. So gonna start from the Monday. Again, first thing we're looking for is for gold to cross that 200 EMA. Before anything happens, that is the criteria on which the turtle wave is founded. So, and it's actually a really good thing. You want there to actually be some space between when it touches now and the last time it touched. If it touched like the night before and it's touching again, those are the kind of trades where the probability goes way down. If it's been a couple days, it hasn't touched the 200 EMA for a few days, those are the higher probability entries. Because the chances are, if it's taken some time to retouch the 200 EMA, you've been in a trending market thus far. Listen, Rux. That's the one thing about a turtle wave. Right now, I think we're sitting at about a 62% win rate. Now, which is just over 50%. Now, we do have a positive RR with a 1:1.25. So a 50% win rate would still work out really well. 62, slightly better than that. But that does mean that about 40% of the time, you're going to lose the trade. So if you're picking and choosing which ones you enter and which ones you don't, you're going to be messing with those stats quite a bit because you're at the mercy of what's called random distribution. So with random distribution, what that means is if there's 100 trades and you're going to win 62 of them, lose 38 of them, if you pick and choose, you could accidentally pick only those losing 38. You're going to mess up the entire stats of the thing if you're not taking every single trade available to you. So for the current stats we've collected and 62% win rate, the win rate isn't high enough for you to skip a trade, take this one, miss that one. You need to be taking all of the available ones to take advantage of that slight edge you have over the market. So, because if you pick and choose, I'm telling you now, Murphy's Law, the ones you pick will be the losers. Okay, so we have a nice little cross here above the 200 EMA. We had a close above. We had not touched for a while. We're also going to start using a little bit of bias into the equation. So we had this massive bearish action come down here. We created new lows, created new highs, retested those lows, and now we're breaking up. So the expectation is we're probably going to get a nice little bullish pullback. We've broken past the EQ. Now, I don't like how far extended past the EQ and Asia highs we are. Asia lows are untested. So we could try for the buy here, maybe come up to the daily R1 previous daily high as our sort of vantage point we want to go to. If it starts to reverse past this daily R1, once it taps this daily R1 rather, that's maybe when you would want to go to break even, because if it hits this daily R1 and reverses, the chances are pretty good that we're going to go for a retest of Asia highs and a test of Asia lows. So using the key levels, which I think we introduced in session 3, I keep looking that way because I'm used to the camera being that side, which we're used to, and the chat's on this side. So I keep like turning there, like I'm talking to you, but I'm like, you're actually over here. So yeah, so that's what we're going to be doing here. So we had a close above. We're going to take $1 above that for the entry. So that candle there would have tapped us in, and everything's going to happen on that 15-minute. Same old, same old. We're going to go for the $6.25 profit $5. No, I think this one goes in the hundreds, not the thousands. $5 stop loss. Now you can already see our $6 profit, $6.25 profit, past that daily R1. So the thing with the turtle wave is, especially when using the 200 EMA, it can range here for a bit before taking TP. So you can take the risky approach, the more aggressive approach, and just stop loss or take profit. You leave the trade running. Or you can take the more conservative approach. And once you hit this daily R1, go to break even, because that is likely where, if price is going to reverse on you, that's where it would reverse from. Jix in the building, my brother. How you doing? How you doing? Hope you're having a fun, freaking-tastic day. Nice to see you here. Okay, so we're in this first trade. This was in the 3rd of September, Tuesday. And let's see what would have happened here. Instant obliteration. I would have thought that we would at least have gone for that daily R1. What we are bouncing off is this little resistance over here with the body closures there. What you could have done, and again, now here's where the turtle wave can get a little, what's the word? Controversial, if you would. Is you can also hedge your bets on the turtle wave. Now, because of the positive RR, if you win one, lose one, you still end up with a slight profit on the day. So in a case like this, where you know that Asia lows are untested, Asia highs have not been retested, and you're reversing pretty damn close to your stop loss on your initial move that you wanted to catch, you can look at, okay, cool, we've broken below the 200 EMA and closed quite strongly, mind you. You could have taken the risk of either $1 past the close of this low, or just taking it like, listen, I'll take it. If I lose this trade, then I'll take it. 625 versus $5. And taking it there. Again, here you do have Asia highs and the EQ over here. So you would have expected a retest there. It's very possible that this could have retested there and turned around. So up to you whether you'd have wanted to enter before, after it had broken past, or if you would just take it as the rules are. We are already. If you're taking it as the rules are, you have taken this trade somewhere up there, $1 below there. You could be conservative and take it as it hits the stop loss of the one trade. You immediately enter the other. Would have been completely up to you. But let's see how this one would have played out if we're taking it only at stop loss. Looking for previous weekly lows, you could have, if you were aggressive, also gone for Asia lows, since we had broken back into the Asia range. But if we go for the standard 1:1.25, what would have happened? Boom, would have got a nice little TP there, which would have seen you, check that, which would have seen you at positive 0.1.25 for the day. 0.125 for the day. That's what I'm trying to say. So again, could have targeted Asia lows there. Previous weekly low, which is resting over here. Again, you can see it rejected the previous weekly low, then returned. Looks like it wanted to do a retest of the 200. It retested EQ and the Asia highs before making that move. Again, that would have been a riskier play if you had gone for the extended target being Asia lows, because as you can see here, it would have taken you back into drawdown before making the move. So this easily could have wicked past here and gone down. So these are things to consider when going in. So you can trade the turtle wave as a mechanical, this is how I enter, I don't change anything, or you can make it a little bit more discretionary and use your own discretion in terms of the levels and what you're targeting. What the end result ends up being, mechanically, the turtle wave is about a 62% win rate. Discretionary, you are going to start playing with that. Sometimes it's going to have a bigger win rate. Sometimes it's going to have a smaller one. Your RR with the discretionary is also going to change dramatically. If you can keep the win rate the same, discretionary typically, your RR is going to be a little bit better because you'll be going for slightly extended targets. But yeah, it all depends. So here, if we had gone for the extended target, we would have had a -1 there and a plus almost 2 there. So it would have been up about 1% for the day. So that's an example of a situation like this on how you would trade it. Let's look for the next trading opportunity. And with the turtle wave, just take 2 bullets in the day. Don't go for anything more. Typically, if you have more than 2 entries on the turtle wave, that's an indication that price is ranging around the 200 EMA, and it is going to chalk your account if it's ranging around the 200 EMA, because it's not going to give you a big enough move to sort of set itself. Again, you can see here, I said we didn't quite retest the 200 EMA, came down, grabbed more liquidity, retested 200 EMA perfectly, then it made its move down. I'm going to assume was this a news day? This is a 2 o'clock candle. This might have been a news day. Let's actually have a quick squeeze here and see if that was a news day, because that is some quite interesting price action we got going on for the day. I want to go to, what was that? The 3rd of September, right? 3rd of September, yeah. What happened 3rd of September? We had PMIs coming out at 4. Yeah, PMIs is quite an important news day, so hence why we had a little bit of range just here. But luckily for us, it ranged in our profit area. Where was the 4 o'clock candle? 3:30 was the open. Interesting. Okay, let's go for the next trading day. Again, I'm sticking to the rules of only trading the turtle wave between 8 and 8. So that's pre-London and late New York, just before New York close. Not quite. Not quite. This is how it teased that. Came so close to touching and goes away. Okay, so what our entry criteria would have been is this little rejection candle here. We might have wanted to take a sell from down here. It doesn't look like we would have been tapped in, but sometimes these do come back to surprise us a little bit in the end there. So $1 below that initial rejection candle. And you can set your limit there. I think this is quite late in New York. It's like 4 o'clock already. So that may or may not get tapped in. We'll see if it taps in before 8 o'clock that evening. And then next candle closes above, below the 200 EMA. Next candle closes above. Now, just as look where we are, or what's happened. We did have a slight little bearish action here, create a new swing low there, and now it looks like we're creating a new swing high. So now that we've broken these previous highs here, we're past Asia highs. Asia lows were tested, taken, Asia highs taken. Looks like we're going for a retest there. We could look at taking the buys above here. So $1 move above here. Yep. $1 is, let me get that exact about there. So that would kind of would have just missed us. And then sort of like using that, what is that, daily R1 as your vantage point. Again, if you want to be conservative, going break even. So if you want to be conservative, going for the 1:1.25. If you want to be a little bit more daredevilish, going for the daily R1 or the, what is this, the weekly pivot. So let's go for that. This is on the Wednesday as well. So Wednesday might, so this might have been setting with the bottom wick of the week. And now we're gonna go set that, do bullish action to go set the top wick of the week before a slight little pullback. Because Wednesday, Thursday is typically when the reversals happen. So I think that would be our A setup. That would be the B setup. And let's see how that played out. Okay, not tapped in yet. Ranging in between. Like I said, I don't like when it ranges in between there. Our entry was quite late into New York. So what time is it now? Past our 8 o'clock cutoff, so we wouldn't have taken either one of those. But because of how we chose to enter, we also avoided getting into a lot of this chop. What does Chris say? Chopperara? Okay, so now this does set an interesting dynamic for us now. Depending on where price opens up, that pre-London. That's exactly what I meant now. So ranged just on the 200 EMA, and then at the 8 o'clock, we're all the way extended up here. So now it gets a little bit tricky when it comes to the turtle wave. I think this would have been a no trade opportunity because we're already quite extended from our vantage point being at 200 EMA. Asia highs already taken, broken through. What we would have maybe waited for is a break back down into Asia highs, getting towards that 200 EMA again, and maybe looking for the quick little sell there. But this is a little bit too extended to get into. Boston just missed us. But I find waiting for that 8 o'clock candle saves you from a few losing trades more than it costs you winning trades. Okay, let's just speed up time a little bit here. That would have been a beautiful buy though. Okay, coming close to. But like I said, you do want to see a nice, good trending market when you're doing the turtle wave. So right now, like I said, this last month, because we've been at around all-time highs and chilling around there, it has been difficult because we're not getting far enough from the all-time highs. What happened there? Was that news? That was a news candle. Also, entering on the news candle can be really tricky. So now, let's back up a little bit. Okay, this isn't all-time high. This is all-time highs. No, all-time highs is somewhere up there. Let's actually mark that. Right. All-time highs is there. Have that in red. Okay, zoom back in. So now, interesting. So we had that tap of the 200 and the EQ and the weekly pivot. Instant rejection. So we broke past Asia lows, came back up, broke past Asia highs, closed above the weekly R1, hit the daily R1, rejected off there. And we have all-time highs up here. Now, even though this is a very extended candle, and typically I don't like entering the turtle wave on a very extended candle, because what is this in total? $20 move. Yes. So even though it's quite extended, because all-time highs are right here, and this is above the daily R1, if you were to take $1 pause there and enter there, I think, now what's this, daily R2, you could go for the extended target daily R2. And how many pips is that? About a $10 move. Or if you want to be conservative, do the $6.20, 25 cents that we typically go for. But I think the R2 might be on there. We haven't touched the turtle wave again, so let's see what happens. Pause there. Okay, we got the close below with this one, and it tapped the EQ in weekly pivot, but we already tested that. So if it's going to come through again, realistically, it's probably going to do a lower stint below, and we have the daily S1 down here. So we could have attempted to go $1 below there. No. $5 move. No. $6.25 move to TP. $5 stop loss. And that would have taken us to the daily S1. So that is about where we would want to try and go. I think we would have just been wicked here. Look at that. Would have tapped us in, just wicked us out, and gone. But let's see if we would have gone to TP. Asses, that would have teased us. Okay, so that would have been a loss there. Came devilishly close, wicked us out, devilishly close, came back out. And that would have been all she wrote. That would have been at 4. The better play would have been trying to go for those all-time highs. And that would have been all for the day. Okay. Let's go to the next trading day. Basically what I'm saying with, what's the thing? Ranging market. So you can see here how ranges for quite a while, and once it starts ranging like this, even when it has this is actually a large range, $17 range, which is big, but our take profit to TP is a $10 range. So you can see how this is quite a large range, and the reason why we're ranging like this in quite large intervals is because of how close to the all-time highs we are. So I'm going to be really happy when gold takes a giant like $100 move away from all-time highs, and we're going to have a slightly better price action. Because from what I understand, like no matter what strat you do on gold, this last little month or two has been quite the tricky one to trade. Okay, coming in, come on, do your thing. And we're in. Okay. So let's just look at the greater context. So we were bearish, shifted bullish, and then shifted back bearish, created a new low, didn't break that low, created a new high. This bullish push is somewhat extended, but we have the EQ above. Asia lows were taken, retested, taken again, tested, phone supported Asia lows, broke above. Asia highs were broken, retested, coming up. We're at the daily pivot, which is somewhat concerning because the daily pivot might act as resistance. We have the EQ just above, which might be the magnet price wants to go to, but where the EQ is, I don't think we have quite a lot of space to work with here. So we would have taken that candle because that's a candle that closed above. 100 points above that would have been entry. Would have attempted to maybe take it there. $5 stop loss. Where would the $6 take profit be? Above the EQ, what you would have done, safest thing to do would be take a break even at go break even at the EQ, and then try and hold. And if you were even more conservative, you might have maybe wanted to take entry above this daily pivot as opposed to the $1 above this candle, knowing that the daily pivot would act as at least a little bit of resistance, which it acted as here. But let's go with the standard rules, see what happens. Yeah, so exactly what we said. Daily pivot acting as resistance. So the conservative approach would have been to wait for a close above the daily pivot, take it from there. We went for the aggressive approach, got the wind kicked out of us. So again, similar move to what we did before, what you could have done, knowing that if it hits the stop loss of this trade, then you are likely taking the reverse. And then here, I see this one wouldn't maybe have been as clean, because Asia lows would have been a nice little support area there, which it found support here. So typically with these ones, you want to try and get a little bit more return to try and manage the P&L loss from the first trade. But here we don't have quite the same vantage point. So at best, I think your best option would just be to take the standard 1.25. And that would have wicked you too. So that would have been 2 losses back to back. So see what I mean about where we are next to all-time highs, ranging as soon as we get to this 200 EMA. Okay, going to the next day. Okay, we're gonna do, let's say, 2 more days, Chad. But let me know if the rules so far are making sense, guys. Folks in the chat, let me know if you're still with me. Okay, when does... I thought we're still in Asia. Okay, so... Wait, let's go back. September 10th. Okay, to 8 o'clock. Okay, so here, you see previous day we ranged with this 200. We're ranging now still. For me, in a situation like this, particularly when we're inside the Asia range, I would say this is a no trade day. Reason being is recent price action. Previous day ranged in this 200 EMA. We have broken below and closed, broken above and closed, broken below and closed, broken above and closed. And we're about to start the 8 o'clock session, pre-London session now. I would actually wait for either a break and close below Asia lows, or Asia highs would be a little bit extended from the 200 EMA is. So I probably wouldn't want to take the buys there. But if I was considering buys, it would be above Asia highs. But the A setup would be Asia lows to EQ or daily S1. And that is what I would aim for there. At least when the day started, that's what I'd be looking at. Let's just see what price action was for the rest of the day. See, quite volatile. That did not close below Asia lows. That still did not close below Asia lows. All right, okay, that one closed below Asia lows. But now we're right by the daily pivot. And what time is it now? 11:30. Now, we'd have probably left that. Yeah, check this range, Chad. And that's the thing with gold right now. It's ranging, but it's ranging in large-ass ranges. Okay, where are we going to now? Daily R1. So like, at least with small ranges, you know more or less that you are ranging. It's when you get... Wait. It's when you get tricked by it doing these massive moves and then coming right back to its origin. That's when you want to get sucked in. So, like I said, I wouldn't have taken the buys here. Would have been looking for the sells, and only would have been looking for the sells if we broke and closed below that Asia low. So that would not have given us an entry. Got it. Let's go to next day. Come on, let's go till we get our next win. Let's end off on a high note. Okay, let's see what's happening here. Okay, no. Tony EMA is still miles away. What was here? Okay, let's see what happened here. This was Wednesday the 11th. What happened on the 11th? No, Wednesday. CPI? CPI, that's the one. So, CPI, huge bearish action, hit the daily S1, reversed up. I would want to buy above the 200 EMA there because we would have broken past the EQ, hit the daily S1, closed above the EQ, closed above the daily pivot, going to retest Asia lows, Asia highs, daily R1. Yeah, okay. Let's see if we would have gotten that. Yes, no, yes, no. I wouldn't have wanted to take the sells because of how extended things were already. Okay, so I would have taken this 100 above, would have been just above Asia highs. Just above Asia highs there. Let's see how that would have played out. Now, could have gone for the extended target of Asia lows to Asia highs. Let's see if we extend the target just a little bit, just to Asia highs, because they're just right there anyway. Okay, in. Okay, at that previous daily highs when you would have considered going break even, because that would have been some resistance, because it hasn't been retested yet. And it would have been a good idea to do so, because as soon as it retested previous daily highs, that's when we reversed back. So found support at the previous daily high. So that's when you would have considered going break even. This close above would have been promising. Wicked up, back down. Now, gold was tricky in September, guys. Okay, what time was this? Late into the evening. Let's go to the next day. And then it goes right back to ranging like a mofo. Okay, 8 o'clock there. Took the little spike with us early in the morning. Retesting the EQ. Okay. Now, looking at this, we are still more or less in the range here. We are still more or less in the range. Not far away from that all-time highs. Broke and closed below the daily pivot. Asia lows have yet to be tested. Would I have trusted a sell there? Daily S1 all the way down there. This would need to go. This whole structure would need to shift bearish for us to go for the daily S1. I don't think right now all this bullish momentum has been decently strong. I would trust the buys a little bit more. The sells would probably go down to about Asia lows. Asia lows only being $2 below where price closed. I'd be more inclined for buys, which we immediately got the buy there. We didn't close above Asia highs. So what I would do, let's say 100 above Asia highs, anticipating that we would get that further momentum up after this rejection. 65, 500. Target that we could aim for. You could aim for the daily R1, or I'm assuming this is the weekly R1. Yeah. But let's go for that conservative target there. Yeah, let this be the win we've been looking for. Bob's your uncle. Schmecked. Okay, we're right. Oh, an all-time high. Oh, so Chad, if you had been super aggressive with this one, anticipating all-time highs there. What day was this? What happened on the 12th? Was this news induced? 12th would have been PPI, unemployment claims, and all of that. So if you were feeling brave, could have gone for, if it hit all-time highs, it was going to keep going by another, let's say, $5. So that was 13 plus 5 is, I can't math now. 5, 6, 7, 18. And I probably would have smashed right past that. Yeah. That would have been lovely. So you see, it's important to incorporate what your daily bias of the day is, looking at the immediate levels that are around what you're doing, and that's when the turtle wave is best served. Now, September, absolutely shit month for the turtle wave because of how close to all-time highs we were. I think we set these all-time highs on the 12th. I think we set new all-time highs like the Monday or Tuesday after that still. So I'm hoping NFP tomorrow brings the dollar way down. If we can start trading around 2,400, somewhere in that ballpark, I'll be very happy. I think we right now we're trading, no, not 2,400, 2,500. I think right now, where are we in real time? 2,600? Somewhere there. I think we hit all-time highs at 2,600. Where's my all-time highs then? No, man. What's this? Oh, I'm still in replay. Yo, see. Almost lost my shit. Thought I missed all-time highs. Okay, yeah. So all-time highs at 26.85. Jesus. So yeah, we went from 2,500 somewhere in early September, the low 2,500s, all the way. Where's September actually? Yeah, so we set these all-time highs. This is the move we just saw. 12 September, broken 2,500s. And then we spiked all the way up to $100 past that. So yeah, so I'm hoping NFP brings this all the way down, back to the 2,500 somewhere. So that the all-time highs can be quite significantly away from where price is trading. I think that's going to make the price a little less rangy. You can see here we've been in this massive range. Because here, if you just look at how many times we've gone, test the 200 EMA, test the 200 EMA, break below it, come above it, break below it, come above it, break below it, test it again, break below it, come above it, break below it, and this is in the span of Thursday the 26th till today. What is this, a week? I can't math. How long is this? A week. A week. We've been breaking below, coming above. So, not the greatest range. This kind of price action is a lot better. If you had caught that little buy there, you would have been smiling your ass off if you had held it. So yeah, so I'm hoping for a nice little dip, and then we can hopefully, after that dip, if we get any significant buys at really good areas, that I'm going to hold till kingdom come. Because I know overall with the Fed's cutting cycle, gold is going to be bullish long term. I just need a massive pullback so I can buy that dip. I sound like every retail trader ever. Try to buy the dip. I'm telling you now though, I just need NFP to crash this thing down a little bit. Even if it's just down here to the, what is this, the yearly pivot? What's this thing? The monthly pivot. Even if it's just down to the monthly pivot. If we can get somewhere around here in the low 26s, high 25s, then I'm gonna hold till kingdom come, Chad. I'm gonna put a good amount of money in an account. I'm gonna probably risk like 80% of that account, and I'm just gonna hold. I am just gonna hold. If you see, I'm not gonna tell anyone how much money I made, but there'll be signs. There'll be signs. If you see me driving a Toyota GR86 sometime next year, you know what happened. Oh, you know what happened, Chad. So, okay, yeah, that was the Lost Turtle Wave sesh. I hope you guys enjoyed that. Go ahead and back test it for yourselves. I still have not quite figured out how to really test. Like, for instance, I want to buy the dip now. I haven't really figured out how to test to know when you're going to get those extended moves. I've tried adding other indicators into the mix. I haven't quite figured it out yet. So if you guys in your back testing, if you come up with any breakthroughs, go ahead and let me know. That'll be appreciated. But yeah, Chad, I hope you guys have enjoyed it. Rux, Jex, and the gang, I hope you guys have enjoyed this sesh. Thank you for the support. Thank you for coming. And y'all, fam, if you guys like the content, go ahead and share with your friends. Go ahead and share with some newbies who are looking for a new strat. I think the Turtle Wave is going to be making moves in the not so distant future. I'm quite proud of it. Seeing as the fact I came up with it myself. It's improving, effective. It's had a not so great last 2-ish weeks. This week I've decided to leave it alone until after NFP. But yeah, I hope you guys enjoyed the sesh. You guys take care. What do Chris and Keeks always say? Peace and love. And I will see you guys in the next one. Next week we're going to be back testing US 30. We're going to be using the Grubber Kick strat, Keegan's EQ strat. We're going to back test that. It's going to be quite good because I've been playing around with forward testing it quite a bit, so we can figure it out together. I'm not claiming to be an expert at it. I still need to practice getting my eye in for that particular strat. But yeah, I think it's going to be a good one. So we're going to see you next week at 12 o'clock on a Thursday. Peace and love, Chad. See you guys then.